I'm Richard Bailey, Head of Training and Development at Axia Futures. Today, from Harry, you'll learn how to best select markets to trade using information gained through an effective debrief of a similar event. You'll also get a great insight into the thoughts, processes going on as a trade is executed and managed as he explains this trade.
Good afternoon, guys. Welcome back to another stream. Today, another vaccine released from Moderna, this time on the 16th of the 11th, which is again another Monday. I'll get straight into it this time. Same format as normal. Just sort of show you the standard of I haven't done the structure. I've just sort of done the 1 minute charts all in sort of one screen, and the release of it. Then the execution, and just a few key takeaways, which I'll try not to repeat myself from last week on sort of the key takeaways. So if I haven't repeated myself, then they're in the on the Pfizer vaccine execution as well, which I did a week ago. You can go back and look at it. So they put quite a lot of similar situations. So the Moderna sort of vaccine prep was again very similar to how the Pfizer one is, and with a few sort of different takes on it. So obviously the standard of going through which markets you wanna trade. Again, which markets will offer you the best risk reward. Obviously going again with the market structure, as that can follow like the more technical structure of it. And so again, from the last point, the gold, way we spoke about gold last time, was sort of the one where obviously it's got less stimulus, obviously because of the economy is going to get back together, so there's not much way of spending, so hence why you get gold to go down and you get sort of the actual normal risk on. So then for me, then gold was the play. So, instead of not doing it last time, you had oil, I hit oil, stocks, bond, and S&P. You cross sort of the oil out this time and then you trade the gold. And that was the other thing. And as well, another thing to point out from doing this, that's the reason why I traded the gold. I like the gold technically back down as well, which gave you, last time I gave you a great clue. So getting in sort of the same reaction, you should get great, and obviously had a great setup, due to lack of stimulus and spending. So you end up then picking that market there. So that's the sort of a key takeaway again from what I say at the end is the reaction and picking the best markets for risk reward. So I was willing to hit the gold on that. And again, how the news can come out. So the news this time wasn't as direct as what it was with the Pfizer one. As you'll see, you get two headlines where I get in on the first headline and then I stay in for then the second, which gave you the efficacy of the, I think it was about 94%. I think they put it as on 91. So it depending on how the news can be released, it reminds me of, and as I'll explain, like an OPEC meeting, the way it came out. They start the meeting and you're sort of anticipating something that could possibly be said, then you create that comment and then you get sort of that trade. So I'll go into that in a bit more detail in a moment.
If you want to learn the 3 keys to consistent trading success that our team of 7- and 8-figure traders use to stay profitable in any market environment, then check out the free workshop that we're currently offering. Click the link that should be appearing at the top right-hand corner of your screen, and a free registration page will open up in a new window so you can later return to watching this video. You can also register by visiting elitetraderworkshop.com. In this free workshop, you'll learn the exact steps our biggest traders use to develop consistent trading success and shortcut years of trial and error.
And again, organising your workspace, the same again. Mine are always pretty much the same. I very rarely change the ladders that much. Setting the correct clip size. And again, you'd expect it to be smaller than the Pfizer vaccine overall. So that's the way, I thought about it. I think I only traded 3 markets on this time. So the way it come out, so all these are the 1 minute charts, but I'll go to what came out first. So you got the Reuters headlines in the top 2, and then the bottom is all the Bloomberg headlines. So the way that came out. So as you can see, 52.09 was the Moderna announces longer shelf life for vaccine and at refrigerated temperatures. So for me, shelf life and refrigerated was sort of the key. And the fact that you get shelf life, which I find shelf life to me is like a can of baked beans, a tin of soup. That's my initial thought. And refrigerated for me means above Celsius, it can go in the fridge. That's just my basic thought. So I still think the shelf life and refrigerated were very important, even though we sort of maybe knew this data so much. And again, this goes to sometimes maybe the lack of reading for myself, that I didn't read into enough of that. So that's that part where I got involved a little bit. I only got in small on this bit, as we'll see. I didn't go really big on that. And then Moderna, their phase 3 study met statistical criteria with a vaccine efficacy of 94.5%. And that's where you get the next part, which again, if you notice, is 4 minutes later. So you're waiting that whole time, as you can see, with the reaction of what happened. And obviously there's a Bloomberg headline to say the rest. But so this was, so you got gold, and you got stocks, SPU, and then you got Bund down here. So if you look at the equities first, equities do a very little sideways before another explosion. SPU doesn't really do it that well. I think stocks do it much better. And again, they're the underperforming sort of equity at this point as well. Hence why they give you still a good advantage, I feel, than the S&P. That's why I didn't do this. As you can see, this sort of drifts up a little bit, and they stay quite high on the day. And I think the S&P reverses this at some stage. So that's the way I was thinking of it. And then this big spike, as you see, is the efficacy one. Gold is a different, actually, so I'll go through, sorry. So this gave you around 30 ticks. SPU gave you, say, 20 handles. Bund in the end went from sort of 05s down to, so that gave you 50, and gold did about 240. So with the Bund, again, the Bund does a little bit of congestion before then it goes down. Same scenario as last time. That's the 1 minute EMA, which eventually I held all the way, covering most of it. Then I tried to sell more, which again is probably the bad point. And then I got out once it crossed that line. And as you can see, the delta. And gold, I think, was actually probably one of the best. I mean, I liked it technically, and my plan was in my head, as long as I'm in big before the low of the day, where the low of the day was quite bad. And then we had a cash low previous day again, which was quite bad. So I thought, as long as you're in before the low, you've got such good risk reward, you shouldn't really see that then trade back up. If that takes the low, I mean, you should get some really big unwind. And that's exactly what we got in the first 2 minutes. And again, then after that, we couldn't actually take the low. I got out, I think, somewhere in here, and it still went another 130 ticks below my price. So I was scaling out very quickly. I didn't really, as you'll see, I didn't really know how far on side I was, but that there to there, I'm going from that point to that point, is 240 tick move. So that's how I really like the structure in gold. So you pick your markets which offer you the best risk reward. And the reason why I didn't trade S&P, because I felt like the way that it reversed last time, if the Nasdaq can't go bid, it just drags the SPU down, and it can't then, go higher, shall we say. That's what we noticed last time. So I will then just go through the execution of this bit. And I've put a couple pauses in so I can explain at times. So I'll press play and you've got about a minute or so before this comes out. So, and again, it's sort of like being at your desk at the similar time. As you notice, the time is 11:51. And obviously the Pfizer one came out at 45. So I'll go through which ladders are what. And then oil's on the left. Again, I didn't really feel like oil would give you that risk reward again like it did last time. So that's another reason why I didn't go to that market. I felt like gold offered you such a good risk reward last time, you had to then trade that. And it's just, that's the way I was thinking about it. Which market's going to offer you the best risk reward? Again, I like the Bund structure. Again, if you can get, again, I said to myself in the stocks, if I could get in before the high, if we have Moderna, if we're trading around, in the middle, if I can get in before the high, I think that's really good. Again, gold before the lows, I think at the moment you're 50 ticks off the low, and you're sort of starting from that point. So I'll press play. So we're looking at sort of, this happens in a minute or so, comes out about 52.09. And so my first initial thoughts are, the shelf life and refrigerated is quite key. It's better than Pfizer as well, which is, not minus 70 degrees. So you have that in your mind. And then it's all about then trusting the correlations. Mainly, I wasn't really thinking too much about these markets at that point, as you'll see where the mouse goes. Because I know gold can be probably the quickest out of the two, out of the three that I'm going to trade. That's where you can get you want to get your big size away in this market, because I haven't, compared to the other two, this can go further than what these can, considering the size comparison that I've got. So if I could get good size away in gold and then hang on to these at that moment. So it comes out now. So it's sort of then doesn't really start going until, so then I've hit stocks and Bund, a clip in each, tried to hit gold, got out of that, and then I'm trying to then just keep an eye on these two, as long as these are going on side, and then a gold goes again, I'll hit another clip in each of them. So we haven't got to the low yet, and it's quite a bad low. So as long as we're, I've got one clip, as long as we're still on side, letting those go, my main focus is on the gold. Only a couple clips in. So as long as we then start to look aggressive on the way down, I kind of feel like you could hit this low. So then 2 clips up to 16 lots. I had enough time here, in my opinion, to get that, and I'm too worried about putting a stop in. And then we get a big blip, scaling out very quickly, up to 11 lots, now to 8. Just look at the way this is going. It reminds me of a previous one. Now I'm down to 2, getting out of everything. And then just holding a couple, and then eventually I just get out. And even at the other times of focusing so much on the gold at that point, I've actually, because I was trying to just talk through that, I've hit other markets as well. And this is sort of then started to unwind the story of what was going on. So I'll go back to that, then we can focus on so speaking through the gold, that's where I was being aggressive in the gold at this point. So that's where my main focus is at this time. I've still got 2 clips in each market here. And as that's going, then these 2 markets start to unwind. And again, I feel like as long as you can be in before the lows, maybe in Bunds as well, look, you see the markets then start to travel. Spoos at the top, and 2 more clips in the Bund. I don't hit any more in the stocks. I think just because the fact we haven't got anything significant yet, and I don't really want to be buying the highs. We haven't heard anything new, and which I'm very surprised even watching it now. When you're going, 15 ticks on side in Bunds, and I haven't hit anything more in the stocks. Again, I feel like it's gone from sort of 60s, 59s. And I covered 4 lots over the 16 that I had on. And then in the Bund, I think I was up with 16 up to then the covered 6 there. So obviously then the gold's out of the question now. So this at this point in the scenario, you're getting this sort of squeeze where you haven't got any more new news yet. So again, you're 2 minutes away from more news coming out. So in my sort of head, I'm thinking, okay, let's still play the correlations, right? Now let's just pause. So, and again, it's a remembering I actually watched a previous Joe video before this actually happened, and it was one where if you've missed the news comment, where else then can you get in? And it was on the YouTube channel. I actually went back quite far, just to experience. I remember how Joe used to do his videos, etc. So I went back and looked at them, and I watched a couple. And it just triggered my mind again of the low volume caves that you get. You've broken now, you've got this little low volume point, you've broken the low. Really we shouldn't be coming back above sort of the 91s, 92s area. And then maybe can I work in a bit more and sell more? I've only covered a third of the position. And again, the stocks are squeezes. I never went offside. I think the stocks held the 64. So that squeeze, it was a little bit concerning because you haven't got any new news, but I trusted what was happening in the other markets. Again, the gold never carried on. The SPOO was a bit unsure. This has only been 2 minutes at this point, and the efficacy hasn't come out. So you had to then rely on what you've got at this stage. And if this carried on squeezing further back to the average price, this started coming below the 64 as my price, and we started trading back, then you sort of think like the trade's over, you're then sitting in the pain. So then that's what I'm thinking at this stage, and then I'm just trying not to rush. I'm trying to then keep yourself calm and knowing that there is a possibility coming when, again, like I'll explain with the OPEC stuff that comes out, when they start their meetings, they come out and give their sort of structure and for the event and their quota of what they want to do. Like currently, they want to extend the current situation they've got. They don't want to be increasing their production, so they start their meeting and then they can say something. So your mouse is already on the trigger. I remember this from a previous March meeting where they were going to cut, and you got a very 50 tick, 100 tick move very quickly. So my anticipation was, again, you just got to anticipate, this scenario in your brain is that the move's not over yet. This is where they start talking, and then, it's like someone giving a press conference, they start talking, you see it with like Powell, sometimes they start trying to price in something that he could possibly say, and people start punting long. So maybe, I may have punted a little bit. I don't really feel like that was the situation. I was just sort of trading what I sort of knew at this stage. But this is what's happening. You've got people front running this, and the people that haven't got in at this stage are then going to play for the efficacy if it happens. So you'll see that in about a minute or so. So that's the way I was sort of thinking of playing the 1 minute structures again, as you can see. Again, you've got that Bund, you've got that 2 minute down, and you've got 2 minute candles, 2 sideways candles inside that 1 minute, and you can then play the break of that. So there's the structure again for 1 minute plays, and again, the stocks hold, and I'm not really in too much damage because P&L scenario, tend to, you're, flat and whatever across the board. So 40 seconds or so. The target for me in stocks I wanted to try and reach was 99s. That was the target. So you'll see why I basically try and hold everything in both markets, especially when it's going, because it's quite quick, etc. So I was quite pleased with how I executed it that when it's quite quick, and you've got to be very quick and aggressive. Considering I've got 14 lots on now, and I'm pretty much full size in this one. So now just about to then come into play. Tried to sell 4 more as we're looking then to play that 1 minute structure, not knowing that was going to come out. So you've got about 10 seconds or so, and it's quite, in a way, I'm quite lucky that I've got 14 lots on out of 20. I've got 12 lots on out of 40, and I managed to get some good prices in the Euro stocks as well. So 10 seconds or so. So about now. See, the efficacy come out, and then I get 2 clips and then 1 clip in there. Luckily, I'll get filled on quite front in the queue at that stage in the 70s. And then we haven't even taken the high. Now we're through the high of the day, 35 lots long, still holding the buns. Buns do quite a big squeeze quite early, and I panic a little bit, and I get out of 7 lots. And again, you've got the cave here. So again, you're leaning on the structure. The bun's very aggressive as well. Much more aggressive than I feel than the Moderna one. So I'm trying to then hold the 11 that I've got at this stage. So I've covered 3 up that, and then trying to look for another little flush low. I'm trying to work on holding the sides, and this is how you can sort of not be greedy, but you can then maximize sort of the P&L out of the trade. So well, still 25 lots, covered about 11, covered about half of the buns now. Then you still got, I don't really want to see it back above the 80s. You want to see then these zones hold, so the 80s and sort of around the 75s in buns. I tried to then sell a bit more, trying to be smart in my head maybe, because again, at this scenario, I was thinking about previous trade, was that I didn't sell enough buns as it kept going when I fat fingered that time. So what I did here in the buns, in stocks this time, as I'm being a bit carried away talking about the bun there, was I covered quite a lot. I think I clipped some back out here, like 1 big clip of 8. So I reduced down to 16, I think it was. And then as long as we held here, I bought another clip at that stage. So looking to then play for a little another leg higher. So my target really was the 99s. And then as long as we were holding this area, I was willing then to then hold it again, looking for another little flush up. You know, I've got 5 lots on the offer at 89s. We just sort of churn here. Again, I clip a big clip out, or yeah, sorry, 5 lot out there, as we're not really going. Down to 6 buns, looking for a little another flush lower to maybe then squeeze the stocks up. I'm really trying to hold to the 99s and maybe a little extension. So it's not a fact of trying to be greedy. I'm trying to then stick to, I know you're trying to maximize your P&L. It's like you watch our elite trader. He's very like, he would trade it until the flow's really out, where I'm not really like that, because I can't seem to keep bringing my price. You're buying higher, you're getting a worse price each time. I just feel uncomfortable. I rather feel comfortable and understand more structure across everything. So again, as long as you're here, it's okay, It's a shame I haven't got the DAX up, because then that was obviously, you could lean on that with, the stocks. But again, I do still hold a good portion of size. Still got 20 lots on. And I do then sell the low in the buns, looking for another leg, where this is where I could get a bit more, bad. Again, still holding, breaks the high by 4 or 5 ticks. And you're just looking for them to keep rotating it. Sometimes it may feel like I'm trying to then force the move. I brought my average price down quite a long way in the bun now. You've got this little pause zone, which I like, I'll go ahead in the gold, you've got some volume at the low, and then I've gone out to 4 lots, because I don't want to then, in my mind, I don't want to give P&L away, you've had a really nice move, don't be stupid now and give P&L away. 15 lots, can't really seem the stocks to exchange any more momentum higher. I think there is one more leg in the buns. I do end up trying to play quite silly in the end, which is one bad thing I do in the buns. I'm trying to force a bit more out of it when I've actually done pretty well in it anyway. And I'm trying to then let the Euro stocks run as far as it can go. And I've still got 15 lots on at this stage. And as you can see from that 1 minute chart, I think around here is pretty much the high. Up to 12 lots again, clipping again, being a little bit greedy, looking for one more little go. Then we do get this sort of little pop, and you're just looking for that then to continue. This is when I start to go a bit more uncomfortable and silly with things. I do it this quite quickly. I'm just thinking about it now, that when I'm adding into the lows, I then trying to get out really quickly. That's when I think I'm trading a bit silly, like, trying to force a little bit more, because I'm a bit unsure, let's keep playing this correlation, and I'm trying to hold my size in the stocks. maybe this is the point where I have got a little bit greedy on it, but I'm still trying to stick to the correlation. I'm trying not to be greedy, but maybe in the back of my mind thinking of it, it's a little bit greedy in my head. Just as another way to think of it. I mean, it's the right sort of thing to do, I think. Trying to play a little bit more, sort of like our elite trader does, just trying to get a little bit more out of the market. The correlations are still fine, stocks are still holding. You can still play for the bund to have another little test lower. You got a little bit out of it. Maybe I could have covered now. I mean, the move's done 50 ticks. That's pretty much the end of that move. And stocks still got 15 lots on. I still think there's a chance for this to go a bit higher. And again, I do, in my opinion, holding the 15 lots, I do quite well at this point. You're creating this little ledge here in between the 87, so I think once you then start to trade up, I'm just really trying to hold everything to then really get out of my target, which was the 99s I felt like you could reach to. So I'm sort of sticking to that. Holding 5 bunds, that's sort of the trade's over. I do, trade silly, and I still sell a bit low just for looking those little flushes, because when I traded it last time, it gave you more and more, and I had no size on for it. So I start trying to play like that when the stocks go up a bit higher, I think, as well. I was really trying to hold for these 99s. And then trying to just maybe be a bit greedy with those exits up there, trying to hold. But again, it sort of then started to slow down and churn, and eventually I think I got out. So again, this is only for 10 minutes, this move so far. And you have gone very far. Well, actually, I thought you went much further in the stocks than until I looked at the end. We've gone 30 ticks, which isn't very far. Even though the bund did 50, it's probably a good comparison, really. I'm still in with 12, and I think, at this stage, I'm still holding a little bit too much. Well, not too much, I'm just trying to hold a still good amount of size, because if you're holding a 5 lot, that's probably okay. You don't want to be holding 1s and 2s, really, at this stage. I do try and sell gold, as you see there, for a little 1 lots, just to get another feel. To see if we could have another leg go lower, because that never made another new low. But that's sort of it. That's pretty much how it goes. I do try and sell a little bit more later on, and stay in this trade. I think this lasts about half an hour or so, as you can see there. As you can see, it lasts for another, and then I do start to try and buy a little bit more down here, just to play little ranges. I feel like I'll just puke it. Selling lows again, as you can see, drag my average price. I had some daily lows lower, being a little bit greedy in this scenario, just trying to force a little bit more out. At this stage as well, I've seen my P&L, and I sort of think, you've done very well again on this scenario. So, don't try and be stupid and give it away and lose money, because there's no point trying to force a little bit if you're just trading a little bit smaller, just to force little bits after little bits. Now if this is over, let's just accept that. Or what can I do to keep myself in the bunds without being silly? Same as the stocks. I think as soon as you start trading back to sort of the 80s, 70s, that's when that sort of trade diminishes. And the SPU as well is struggling, and so is gold and oil. The same sort of thing across the board, sort of then starts to struggle, and you just use your correlation in mind then to, sort of diminish, shall we say. But yeah, as you can see, it sort of then drifts about, and I start to try and play this, and then the bunds then go back above the 1 minute EMA. Sort of the S&P can't go higher, sort of creates a little structure, and then the gold just goes sideways. I can't remember if gold does try and go a bit lower. It held the 1 minute EMA here, then failed. But from the whole scenario, as we go from the key point takeaways of it, that I traded it very well. I didn't really think I put too much of a foot wrong. Maybe towards the end, maybe talking about it a little bit greedy, but I think that was the right thing to do until that correlation is really over. not just like hitting lows out of, silliness, shall we say, because sometimes it's not giving you that much of a rotation, and it's okay to then sell lows and just scale out quickly. But I know when I like thinking about it and looking at it, from selling at that point and trying to get out really quickly for really small ticks, that's not really the way I should be doing it, and the way for myself anyway. But that's a little bit of a point from myself. So the key takeaways I feel like from this was, which was a very big one, was adapting to what markets, to trade, learning from the previous reactions, so especially the gold, and I think SPOO, the way that reacted, wasn't going to be a good trade. I mean, even oil, I felt like it's going to be less diminishing. I didn't want to really overcommit. I felt like gold was going to be the best, which I think it really was across the board, and same with bunds. So it's just adapting to what markets, were like previously. Being aggressive as well. If you put your target zones where you want to be in when these comments come out, you have so much higher conviction. Like if you're at the low of the day and you've got a nice little structure, if you can get inside that little structure and you get so many shorts, then they're going to puke, and you're going to get a nice, even nicer move back up because you've got that technical structure. Getting in early, I think, and again, was another key thing, because you could have been trying to force that move after the efficacy come out, and he didn't really get it. Leaning on these correlations, adding to the conviction. Again, being sat at the desk, the other vaccine, the Pfizer and other vaccines, they were releasing stuff at around sort of this time. So you're making sure you sat at the desk for that part every day. Another key thing was S&P gapped up both Mondays as well. People front running and that knew this was going to come out. So they both gapped up and, drove up higher as well on both Mondays. And it's going to predict, it's going to be less than Pfizer because it's the second one. Knowing not to, be too greedy and try and make better P&L than the previous, etc. Those tools, all these types of things, because the move's going to be, it's not as game-changing as what Pfizer was with the first one. And again, being aggressive on the second lot, I think when that came out and how quick I was, I think I did really well, to be honest, on that. And I got a bit lucky getting filled on that, 2000 lot somehow. I managed to get filled, and then it went back up. And again, knowing your markets are the best structures, again, that's just your standard understanding of, what markets reacted the best last time and what your technical structure is on the current day, etc. But they're just the key takeaways which I would take in from it. I feel like, to me, I traded it really well. Understanding what I would do is it all goes down to the preparation, etc. If you don't have the preparation, you're going to probably panic a little bit and understand, especially when you had those 4 minutes where nothing came out. You just trust the correlation. Obviously, time went by, but after the gold move, that was 2 minutes afterwards. You still got another 2 minutes then to trust. And if you're getting chopped up, you haven't got the best prices, you're buying higher in the Euro stocks and the S&P, you're just going to get really chopped up. In the bunds, I was quite aggressive quickly and I had managed to be on side, and it gave you that little cave. They're the little things that you can then lean on that time to keep yourself in, and knowing you're not in the position then to get chopped up. It gives you the self-calmness and the understanding of what's going on, instead of, as we've all done, and being, you're onside, offside, and it's not very, then you haven't got the size on, etc. that you want. But that's it from me today. Normal information if you want to get in touch, info@axiafutures.com. I'll be back next week with another stream. Cheers, guys.
Hey, go ahead and click on our subscribe button so you don't miss any of the videos we're producing for you and the trading community. And please take the time to add your feedback in the comment section for what videos you'd like for us to produce next, and what you found helpful from this video. From all of us at Axia Futures, train and trade well.